Will your health insurance come with a side of rate shock next year? Some people don't think it will. How's it going, everyone? I'm Joey Jingola with Jingola Insurance, and on this week's health insurance break, we're going to really get down to it and take a good hard look at why some people, well, a few journalists anyways, think that these increases being touted by states, including Ohio, are a bunch of nonsense. A few weeks ago, you may remember me telling you that you could potentially expect an 88% increase on your health insurance next year. That information was coming from Ohio officials, including Lieutenant Governor Mary Taylor, who, by the way, also happens to be the director of the Ohio Department of Insurance. There are some people in the press who think that Ohio just kind of pulled these numbers randomly out of the air for you, and they really don't apply all that much if you actually take a look at what they're saying and what these rates actually could end up being. Trudy Lieberman, she's a writer for the Columbia Journalism Review, and she said, I'm going to read you the direct quote, "The insurance department has blurred the lines between the cost insurers incur to provide coverage with the actual premiums they will charge, and it was basing its assertions on projected rates that the department had not finished reviewing." I mean, that sounds fancy. It sounds like she knows what she's talking about. Well, is she right? Simply, I don't know. I haven't spent that much time digging into the rates and where they came from, other than the fact that these are coming from the head of the Department of Insurance of Ohio. Well, for argument's sake, let's give Trudy the benefit of the doubt and say that the Republican political machine is hard at work here, making these rates look as bad as possible to really just kind of stick it to Obamacare. Let's also say that that 88% number that we have floating around there, well, let's just say they doubled it. Let's say, worst case scenario, they were able to inflate it and multiply it by 2. Okay, well, if my math is correct, which is, it's possible it's not, that's going to leave us with a hypothetical 44% increase, even if we're looking on the brightest of bright sides here. My question to you is, do you know what a 44% rate increase looks like on a health insurance policy? You don't? Well, hey, don't worry, I got you covered, because we're going to actually take a look at a real-life example of a renewal of one of my clients from this past April. And the example we're going to look at, it's an Ohio family of 4, a couple in their mid-50s, and 2 dependents in their early 20s. Their current rate that they were paying as of April of this year for a $5,000 health savings account plan was $742.23. That's a decent penny. If that wasn't bad enough, they were hit with a 29.8% increase. I mean, that's one of the highest ones I've ever seen. That brought their new rate to $960.79. Whoa, yikes, look out. If their policy was even to increase that 44% next year, that's an additional $422, which would bring their policy renewal next year to a grand total of, wait for it, $1,383.53. Get out of here. Get out of here. Just leave. Get out of here. I mean, to be honest with you, it doesn't matter if they're saying it's an 88% increase or it's a 44% increase. It's going to feel like a 133% increase when that family gets that notice next year. And full disclosure here, this is an example of a health savings account plan that exists on the market today and was sold before the 10 essential health benefits came to be. However, from everything that I have been told, a plan like this should be able to exist inside Ohio's health insurance marketplace. Well, the next question that you have is, well, is this going to happen to you? There's a gentleman by the name of Steve Koff. He is the Washington bureau chief for the Cleveland Plain Dealer. And he said that the debate is over a relatively slim portion of the insurance market. Individual policies are sold by agents or brokers to one customer at a time. There are only about 350,000 people who buy insurance this way. Those are people like you who buy their insurance on their own. She went on to say then that this hoopla over these increases is somewhat besides the point to most of these residents. Well, how does that make you feel? Are you besides the point? What she and you need to keep in mind is that you are the people who health insurance was originally unaffordable for. It wasn't the other 9,650,000 people living in Ohio. Those people, they have coverage through their jobs, and it's paying a minimum of 50% for that policy, probably even more. Is there a slippery slope anywhere to walk on? Is there a slippery slope? So it's important to note that with the recent employer mandate delay under the Affordable Care Act until 2015, other well-read, fairly intelligent people are speculating that with this delay, that we could see a significant more of that slim portion of the population make its way into this marketplace. I mean, to be honest, if we're just kind of opening up and And having a little girl talk here, having your employer provide you health insurance has become an insignificant burden to businesses in this country. You might be saying to yourself, hey, Joey, that's great, but this whole buying insurance thing on my own, well, I don't want to do that. I'm not signing up for that. Well, I'm guessing you've probably already bought several forms of insurance on your own, be it auto insurance, life insurance, disability insurance. I'm sure you didn't need your employer holding your hand through that process, and you were pretty successful at it. Not to mention, that's where I come in. This is my job. This is what I do for a living. I help make these decisions easy for you and help you understand exactly what you're buying. What's the real problem then? Well, the real problem is that you cannot lower the cost of health insurance unless you do some serious work lowering the cost of which it's trying to insure. It's crazy. I've said it before, but unless you go after and make medical services more affordable, you're going to naturally have higher health insurance costs than you want. What's the bottom line? Like I said, it doesn't matter if it's 88% increase or a 44% increase next year. If it's anything more than 30%, you're going to have a hard time calling it affordable. Health insurance information is not easy to come by these days, and even when we do get it, it appears that it's not always all that accurate. You need to have a way to stay informed and know what's going on as the system kind of comes to life in front of our eyes. You might be asking yourself, how are you going to do that? We can go ahead and download our free guide, How to Understand Ohio's Health Insurance Marketplace. It's going to give you that up-to-date information and answer all the questions that you are probably already asking yourself about the marketplace and how it's going to relate to you. So if you want to go ahead and do that, click the link right below in the video's description. Of course, I want to thank you for taking the time to watch this video. Greatly appreciate it. And I want to remind you to stop back next Monday for your health insurance break, where we will, again, as always, be talking about something health insurance related. So again, I'm Joey Gingola with Gingola Insurance Agency. Take it easy, everyone.